Dear learners, how are you? Today we learn debit credit procedures. The debit credit procedures, just first one, debit, we can write down DR. DR, this is the abbreviation. DR means debit, CR means credit. And debit means left side, credit means right side. And this is 6 items of an organization throughout the world. Just in every organizations uses these 6 types items. Number 1 assets, number 2 expense, number 3 drawings, number 4 liabilities, number 5 owner's capital, and number 6 revenues. And first one, assets. If asset increase of an organization, asset must be debit, and if asset decrease, asset must be credit. And expenses. If expenses increase, all expenses will be debit. Suppose salary expense, rent expense, advertising expense, this expense will be debit. And if expense decrease, expense will be credit. And drawing. Drawings, if the owners, we call it owner's drawing, OWNERS, owner's drawing. If the owners draw some amount or draw some product from the business, just that times we consider it our debit, and that means drawing increase debit, drawing decrease credit. That means here we use plus, minus, that means addition and subtraction, addition, subtraction, addition, subtraction. That means this is increase, decrease, increase, decrease, increase, decrease. Again I repeat this matter. Asset increase, asset must be debit, asset decrease, asset must be credit. Expense increase, expense must be debit, expense decrease, expense must be credit. Owner's drawing increase, this must be debit, owner's drawings decrease, it must be credit. Number these 3 items. And in vice versa, we tell about liabilities. If liabilities increase, it must be credit, liability decrease, it must be debit. If owner's capital increase, it must be credit, owner's capital decrease, it must be debit. Revenues increase, it must be credit, revenue decrease, it must be debit. That means liabilities, this is the liable, this is the obligations of any company from where we have purchased our goods on credit. Suppose this is the auto B, from auto we have purchased our furniture on credit. So we are liable, suppose on 20,000 amount or $20,000, and this is our credit and this is debit. When we pay this amount, suppose we can partial pay from this, suppose $5,000, it must be debit. It must be debit. And in the same way, owner's capital. You know this, owner's capital increase, it must be owner's capital, it must be credit, increase credit and decrease debit. And revenues. Revenues, when we sell our goods, we call it sales revenues or service, SERVICS, service revenues. That is revenues when we sell our goods, we consider it in our credit side. That means this must be credit, and debit means this is decrease. Revenue increase credit, revenue decrease debit. So overall we can say again, this is assets, expenses and drawings. These 3 items increase debit, debit, debit. And these 3 items, that means assets, expenses and drawing, if decrease, this must be credit, credit and credit. And this is the liabilities, liabilities, owner's capital and sales or service revenues. So liabilities, owner's capital and revenues, if increase, it must be credit, credit, credit. And if the liabilities, owner's capital and revenues decrease, it must be debit, debit, debit. That means individually if we say liabilities increase credit, liability decrease debit. Owner's capital increase credit, owner's capital decrease debit. Revenues increase credit, revenues decrease debit. So this is the debit and credit procedures. By helping these debit credit procedures, we can proceed our journal, JOURNAL journal. In our next lesson, just we learn about our journal, and ledger and trial balance. Thanks.